Yeah, we can do some things. We can do some things live, because as the ticks go on, we can actually show the audience live what's happening here.
Hmm.
Um,
Yeah, which is really nice here.
yeah,
And
yeah.
so I want to jump into this a little bit now,
Go ahead.
and I want to make sure everyone can see my screen here because I'm seeing different things. And guys, bear with me. This is my second YouTube video, so I'm still learning how to use this properly,
Hmm.
but I'm improving every day. And I tell you what, this one is going to be a big improvement on last week. So I'm going to move
Yeah, it's
over
so
to
good. This is
yeah,
raw.
yes, yes. I'm going
This
to
is
move
raw,
over
man. You're getting
to
the real deal, audience.
yes, sir. Yes, sir. But we always my motto is Kaizen, which means continuous improvement in Japanese. So, although my videos might not be the best in terms of like setting everything up, I'm always improving. So that's all I care about is always
That's
improving.
right.
And that doesn't mean that the information I'm providing doesn't have that value. I think it has even more value than the way I set this up. So, but I'll
Absolutely.
I'll get it set up and without further ado,
Absolutely.
we'll jump
Yeah.
into it.
S-
So,
Somebody to know Kaizen is a continuous improvement 1%. You know,
yes,
um, whether that's daily or weekly, try to do that daily.
exactly. Yes, yes. So, here's what I got now. And I pulled up a chart. This is my, for those that don't know, this is a Thinkorswim by Charles Schwab. It used to be by TD Ameritrade, but that's what I use to look at most of my charts. I also use his trading view as well. But I want to start out with the 10-year basis note. And you can see the 10-year yield. This is interest rates, by the way. So as interest rates go down, money is easier. It's easier money policy. In the top left here is what I'm looking at. And you can see we're in a downward channel, right? And we were also, and this is a weekly chart, so each one of these bars is 1 week. And I want to zoom in a little bit to kind of see what's going on here. And you can see we're forming a pennant, meaning the prices or converging, basically. And we broke out the pennant to the downside, rode on the bottom. And the way I draw this pennant is you just mark the highs and you mark the lows. So I draw a line connecting the highs and the lows, and you get support and resistance lines. So as you can see, this low on 9/18 and the low on April 4th of last year created this downward line, this upward line, which is support. So every time it hits it, it's bouncing off. And we need to see, we're trying to figure out when the big move is going to come. A big move comes after we either get rejected by resistance or we break support. So here you can see we broke support, um, and we bounced a couple of times. When you break support, it becomes resistance. So we broke through support, and you can see we bounced, tested, came down, made a higher low, tested it, failed, and then we broke into the range. And guess what? Look at this. Right at the tip of the pennant, we break in. We have a failed breakout. We have a failed breakout. I'll move into the 4-hour chart so it's a little clearer. And guess what happens here? We break down to the downside, which is very, very significant. So we're expecting a strong move down on rates, which is what is congruent with what we're seeing and hearing from the Federal Reserve. And
Yeah, can I
then,
add something?
yeah, yeah.
With that breakdown, you see you got a double top, and if you look at the RSI, it was weakening.
Mhm.
Yeah,
Exactly. And that's something to keep in mind as we talked about. Relative strength is important to know, and using the RSI tells you, hey, if price action is going up, what's volume doing? What's the volume relative to the price action? And that's what the relative strength index does. So you can see here, I mean, if we zoom into um, Rich was saying, we made a double top at the top of this pennant, right? But if you look at the RSI, and this is a 1 hour chart, let me go to the 4 hour chart. You can see we made another double top, but the second high, if you look down at the RSI, we're
Yep.
lower. So
Yep. Starting
so
to weaken.
exactly. So that means this thing is exhausted. It's going to turn around, or it's a higher probability of doing so. So, I mean, if you are looking for a big purchase in which you're going to take a big loan out, like maybe a house or a car or a business investment, lower rates in the short term are good for you. In the long term, that's debatable. But I digress, and let's look now into the dollar, which I also find very interesting because the dollar directly affects anything denominated in dollar value. Um, and I live in America, so we use dollars. So it's very important to look at that. So overall, dollar in an uptrend in the last 10 years. And but that trend is changing. We're seeing the dollar make a lower high, not only on the price action, but on the RSI. So that indicates that now we are actually in a downtrend, or the downtrend is likely to continue. So let's move into the daily chart, and you can see this is a bear flag that's forming here. Let me zoom in. A bear flag and flag pattern in general is basically one move, a strong move, followed by consolidation in the upper 50% tile of that move. So in this case, this was a down move, meaning it's a bear flag, and you're seeing um, the flag form underneath that support. So we break support, and now is resistance. Now we are flagging, making a flag pattern, and the top of the flag pattern is the resistance. So we're getting resisted here, and we want to see which direction this pushes because a strong dollar means weaker gold and silver prices, weaker commodity prices. It's very important for global trade. A stronger dollar means other countries are going to have to pay more for our stuff. A weaker dollar means the opposite. So we need to pay attention to that. And right now, on Friday, we actually closed. It's hard to see here, but if you zoom all the way in, maybe I'll move to the 15-minute chart. We actually closed below that range. And that is not only a daily, not only a weekly, but that's a monthly close underneath that range. So that's significant. Right now we're seeing an initial pop back up. So let's see how that affects the markets. And I want to let Rich talk a little bit about what he's seeing in the market because I can tend to babble a little bit. So, what you got for me, Rich? Do you want to share your screen?
Oh yeah, absolutely.
So, I'm
If
gonna
you
stop
share
sharing here
the
and
screen,
let you share now. So,
yeah.
so okay. So now Rich is sharing his screen. I'm going to
Okay, so I'll segue what you just said. With the dollar, it's coming up into a actually a resistance area. So also it's popped up. So anything above 97.67, it should have some gain. So that's our resistance area. But I noticed looking at the SPY that we have here, uh, something very interesting. I can show the audience. Let me just reset here. And what we have here is an interesting chart pattern we have here. This is a rising wedge. And as you see on the screen, You see most of the time gaps, whether it's above and below, on which I'm illustrating here is below. There's a risk if you're holding long positions. And in addition to this rising wedge where you see in red, where you have a broad range and it starts to narrow.
Okay.
As you can see, it starts to narrow. What's interesting about this rising wedge, as you can see, it's a hits an all-time high, but it doesn't go all the way high. And each bar you're looking at is a daily bar, right? So being that it's what we call rolling over, it's highly likely that it's going to get down tomorrow and continue down. At least very probable it's going to fill these gaps where there's no trading to also. And if we think about what happened last year, we started trading down if it's a repeat, which I can go into. I'll go to the monthly chart in a second. We reached a bottom in April, but when you do that, it's not a flash crash. It gradually, well, that's relative. It it'll take some time to go all the way to a bottoming area. So what I'm gonna do is this is so a rising wedge where you had the broadened part where you've actually drawn the upper resistance and the bottom resistance.
Hmm.
What you want to do is draw a vertical line and where you're expecting it for a measured move, where it's gonna go down. So I'm doing this live at the bottom of here, putting a horizontal line, and I'm going to look left on the history. But here's a zone from this yellow line here, horizontal line to this white line. There's a support zone there. But
Hmm.
what we're gonna do, I'm gonna do two things. One, let's look left and where it intersects, where you got consolidation here to the left. In addition to, let's go to the monthly and see if keep in mind what we experienced last year.
Look at how overextended that looks. But
So last year, each bar is monthly. This is March, right? And we're in March now this year.
mm,
So March 2025, we had a doji, and the prior month they had an all time high. Doji prior month all time high. We haven't started March yet, but this is March of last year, and this is April, which was a great bounce to where it had resistance, and it actually I marked off here last year. 20% off his all-time high is actually a bear market, but it bounced. It wasn't ready for that. So zooming in, if hope I can make this clear. Let's do a. This is where I'm expecting the first level to hit, maybe by the end of March. And then let's see if it would be a repeat. I'm going to do a measured move of 20% off the all time high. Let's see where we are at. Range price on a percentage. Um,
and Rich, sorry, I'm just going to turn
um,
my camera off so that it's not showing twice on the screen.
Sorry about the. Huh? All right, you know what? Let's do this. I'm gonna go to the all-time high. To I'm gonna use this as an example. I don't see the percentage, but I'm going to use this as a percentage. Oh, that's 17. Um, just about just about 20%.
Hmm.
So I'm going to do, I just want to see an area, if there's an area of support here, if we get there just like last April,
Hmm.
which is, so we don't get confused, let's change this to blue, because we would be feeling blue if it does get there. If you're long and you're holding. So look at this. If we ever get there, this is major, where major support here. You got two touches here where
Mm,
it's last oh, let's go a little further. This is last March 2025, and it went down in April and bounced back up to, and the start of May 2025. That's where we're intersecting if we get down to that point. There's one other thing in the markets. It's like, if this happens, then what?
mm.
You know, what do you do? So
Yeah, I mean, and also you don't always want to have one idea of what could happen. You want to have a bull case, a base case,
yep,
and a bear case. That way you're considering all the risks, all the probabilities, and you can assign probabilities to each um, possibility. That way you're kind of managing your risk, you're managing your expectations, and you know when to set your stops, when to get out, when the trend might be changing, so that you're not stuck holding the bag, watching it go down further, and hoping that you might get a bounce back up because we don't hope here.
exactly. I'm just going back to the daily chart just to on the SPY, which is the overall, which is the S&P 500. If you didn't know already, I'm gonna go to the 4 hour. What I noticed here too also is this. If we're looking at the RSI compared to the actual chart itself, let's notice this. Started here on as the market went down, um, day to day, that it strengthened. The RSI, the relative strength of the market, was continuing up, and as you see, the market was going up. And what you want to notice is that this midpoint, this horizontal yellow line, that's the midpoint. So when
Mm,
it starts to reach in the upper regions, what you want to look for is a continuation. But if you don't, if it bounces under, which we did there, and this trend line here, the 4 hour bullish divergence, meaning it's coming down, but you get relative stress, so there's a change in trend. So it's going back up. But right here, where it crossed, where it didn't hold this trend line, it's starting to weaken. Even though we got green bars going up, it's starting to weaken. Even in the last day, even though it was a bullish day, the last trading day in the SPY, it hasn't crossed above the midpoint
mm.
to continue the trend. So um,
And can I add
I,
something
I
there?
would I would risk, my risk would be the top of the, if I was to short and it's a bear case, and due to geopolitical things that are happening, I would, let's do this live. I would do something like this. Short position. Um, it could be a gap down. So let's say, for instance, it wasn't a gap down. It was here. My stop loss would be above the daily high of yesterday, of on the last trading day, and my target to hold would be the measured move, or between the measured move and the gaps, depending on how things are progressing, because I'll continue to watch. and between the gaps and that move here, the measured move at the bottom of this rising wedge.
Mm.
Now, if you highlight this, I'm gonna extend this, and I'm gonna let you take over after I've done this. And of course, this is gonna affect other individual equities on the downside. So if you're trading, Nvidia, Apple, Amazon, it's gonna take a hit. Now, when I highlight this, let's go here. When I hover over it, we can see this is a wow. You hold if you're swing trading and you're holding. This is a let's see. Wow. This is a 10.5 to 1 risk reward. As you can see right here, it says risk reward
And how does that risk
10.59.
to reward calculate?
There again.
How does that risk to reward calculate?
Oh, what it does is it calculates between the risk, the top, the where you enter, your
Oh,
stop loss, and your take profit.
oh.
So, so if it opens up at um, where it where the bottom it, where the bottom of this green bar is,
Hmm.
yeah, because it closed here last last trading day, but I'm expect there's going to be a gap down at least bare minimum to the open of that trading day. So this is a guesstimation because we won't know until the trading day opens up tomorrow. But in that respect, if it gaps down to here where it opened last trading day to above the high, if it breaks the high, that's the stop loss and take profit. That's a 10 point, 10.5 to 1. uh, yeah,
Sounds like some serious chicken, I tell you that.
yeah, yeah. I mean, you can start if you go if you break up your trades into four, including tiers, four tiers. So if you go in 4 tiers, you can scale out just to decrease your risk on any support level or the filling of gaps too. Also,
Yeah,
there's a gap
yeah.
here. There's a gap here. Let's see if I can extend this. Um, Getting this right. Yeah. So there's a gap here. There's a gap here. So you can start scaling out, or if you're risk averse, you can just continue to hold. And in addition um, to decrease your risk, is to move your stop loss.
Hmm.
Just continue to move. You can move your stop loss down to first you want to if you go down to the gap, you can move your stop loss to break even. So that'll be here, right? And then you can continue to move your stop loss. If it breaks this gap, you can just continue to bring your stop loss to maybe the top of the gap, you know.
Gotcha. Gotcha. Nice.
Yeah, and continue to bring your stop loss until you hit that take profit. So that might take well, with the geopolitical things going on, things can happen quite fast.
Hmm.
And maybe it's gonna take a week. I doubt if it'll take 2 weeks. Let's see what's happening in history, then I'll turn it over to you, Jabari. Yeah, so we had quite a range here, which I'm just going to measure it real quick. So this could take a couple of days, easier the week if we're dealing with these kind of ranges here. I'm just going to draw a line from the top and the bottom of this range here. All right. And oops, let's take this and move this over. So we know a 2 day range is very possible for
Mm,
these kind of markets, which will fill both gaps below. And then in a matter of maybe like a few more days. So yeah, if this comes through for a measured move of this rising wedge, this can happen easily in a week.
there you go.
And that's all. Any questions? That's all that I have. Yeah.
The question is, if people are selling the SPY, what are they buying? Hmm,
Ah, that's where that's a good question
you know,
because commodities and precious metals, you know.
very possible, very possible. So I kind of want to dive a little deeper into that.
Yeah.
Thank you,
Let me
Rich,
stop
for
sharing and I'll let you take over.
thank you, Rich, for that. Um, and now we're going to talk a little bit about commodities. And I'm going to share my screen so that Rich can see what I'm seeing, which is this one. Okay. Yeah, so the markets just opened up at 6 p.m. and we open up green on the week so far for gold. And then the bottom left quadrant right over here, the weekly chart. Each one of these bars is the weekly. Now I'm going to the daily. So yeah, we have a nice gap up. Um, look like gold is trying to push towards its all-time highs. Wow. While we're on this call, the 10-year yield has had a big spike down followed by some buying.
Mm,
And look at this. The dollar is now, after closing underneath its range, it is now above this range. And this is significant
yep,
given that this is a very strong support resistance line. Look here, we let me make sure that you can see me. Okay. Yeah, we got resistance here, here, bounced here, bounced off the resistance here, bounced off resistance, and now we are testing that one more time. Will it get through?
yep,
I don't know. And
yep,
so the SPY already opening up in the bottom right hand corner quadrant, already opening up lower. So a nice gap down. So it looks like Rich's thesis is parent playing out. And like I mentioned, this channel is called relative edge because I don't only want to look at the prices relative to dollars. I want to compare these assets versus each other because that way we can see which one is the best to hold. So yes,
okay,
it's important to look at this, but more importantly, you want to look at the comparative value of each one of these. So
that's right.
now it's time to hop into the pair charts, which is where I find the most joy. And we're gonna start with the Dow versus gold. And this is a monthly chart, meaning that each one of these bars is 1 month. So let's refresh this page. Let's type in the Dow Jones divided by gold. And anyone can go on TradingView and check this out and kind of do your own analysis. Now let's go to the monthly chart just to see what's going on here. So, as we mentioned last week, we're in a macro um, uptrend that looks to be changing because of this bearish divergence, meaning we have higher high in price, but volume is lower on the higher high, meaning that it's getting exhausted and the trend is likely to change, which is what we're seeing. So I think that this point right here in 1979 was the first bottom, and then we saw another bottom 2011. The question is, will this line hold up again, or will it fall through? My thesis is it will fall through due to the bearish divergence. Let's move into the weekly chart, and we're going to go through the monthly, weekly, and daily charts for each one of these, so we can kind of get a closer look. It's always good to look at multiple time frames just to get an idea of
Yep,
what's going on, like, because say you're in the middle of a month, in the middle of a week, the weekly chart and the monthly chart, they haven't closed yet. So you might want to look in to see on the smaller time frames to kind of see what's going on. Um, Sometimes when you're zoomed out, you can miss some things, and sometimes when you're zoomed in, you miss a lot of things. So you see the Dow gold ratio on the weekly is coming down, and now let's move to the daily chart. Um, and yeah, I mean, this thing continues to come further down as expected. We talked about this in the last week, and you can see kind of exactly what's happening. Like last week, we broke down, and now we're gonna go test the bottom of this range. So in a downward channel, the price doesn't just go straight down. It goes two steps down, one step up, two steps down, one step up, and vice versa in an uptrend. So now we're waiting for the two steps down. We're looking for price to come to that bottom level of the bottom level of this trend of this parallel channel, which is support. And what's the next closest long-term support is that long-term upward trend line. So there's a good chance we'll see a 7 to 8 to one ratio, meaning it takes 8 Dow Jones Industrial Average. The Dow Jones Industrial Average, by the way, for the people that don't know, is an ETF that has some of the top tier companies, and it right now it's around $50,000. And gold right now is a little over 5,000. So the ratio, however, is compressing. And believe it or not, even though the Dow is 50,000 and gold is 5,000, there were several times where they were at a one-to-one ratio, meaning that if the Dow was at 50,000, the gold was at 50,000. So I think that ratio is going to come back. I don't know if that means the Dow's going to crash and and gold's going to pump, or I don't know, but we're looking at these charts to see that. So, I mean, what I expect is some initial resistance here, or on the top or the bottom, the previous low, we might bounce here, and then form a little cup, and then um, make its way to the bottom of this trend line. So maybe early in the week we see a strong move, then maybe Wednesday, Thursday we see some playing around here, and then Thursday, Friday we see a larger move, and then next week should be really big. So one
Makes
of the two is going to happen. Either Dow's going to crash or gold's going to pump, or both. So
yeah, that kind of makes sense because if it's bearish during the week, there will be less buyers, less and less during the week as the
yeah.
week progresses, especially Thursday, Friday. And if you're playing auctions, they decay very fast
Mm,
between Wednesday and Friday.
yeah, very quickly. So be careful with that. So the next pair chart um, is the gold to silver ratio. Yeah. So I'm going to pull this up. This is the monthly chart here. So as you mentioned last week, and let me refresh this because it seems like I have to do that every time for some reason. But no big deal. Um, Monthly chart, macro uptrend, but bearish divergence, meaning we see a higher high here. There's a high, there's a higher high, but this high right here on the strength index is lower.
Mm.
So I think that this trend, this upward bullish channel, now that we're testing the bottom, I think we're actually going to break through this time. That's at least my
So,
thesis.
so we're looking at right here in terms of where you went to. Um, Silver was advancing as a standalone faster than gold, but then it's coming into sport. It'll probably switch.
Hmm. Exactly.
You
And
know,
keep in mind, I mean, this doesn't mean that gold is going down. Like gold and silver are going up.
right?
But
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 it's in that in this area, it was like silver going up faster than gold, but gold overall on a longer term is on an upward trend with this
exactly,
closing.
exactly. So, I mean, I want to be in the top performing asset. I want some gold in my portfolio, but I mean, I'm young, I could take more risk on, and I want to be in the assets performing the best. So I need to use relative edge and pair charting basically to get an idea of what's going on. So I
Mm-hmm.
mean, 65 gold to silver ratio is a very strong support in the past. We tested that. We broke through, came back and tested it. And now let's zoom into this is a weekly chart, by the way, and then now let's move to the daily chart, get a better idea what's going on. We had a very strong up move here, which is oftentimes called a control bar. So this green bar right here would be a control bar. This green bar here would be a control bar, meaning that there was a strong move in that direction. So usually control bars can act as support or resistance. So look at this. I mean, we had a control bar up and then found support here, found support here, found support here, another control bar. So that means when price gets back here, it's going to act as resistance or support in this case because we're testing it. But if we do break through it, that means we can get a flush down to the previous support. So I'm expecting this gold silver ratio to collapse, which also supports the narrative. I mean, in a commodity super cycle, typically what happens is the Dow sells off, gold rallies, silver rallies more, silver miners rally more, and oil rallies. So I'm trying to see if these charts are supporting that thesis, and so far they are. So one other thing I like was, and this scared me at first, but I looked at the charts and they told me a different story. So on that control bar on the RSI, you see we broke above the 50. When you're above the 50, you're more bullish. And when you're below the 50, you're more bearish. So we got above the 50, we came down, tested it, bounced, but we couldn't hold above. And now look at this. We broke below and tested it right here. We tested it. And now we're making a lower, now we're going lower. So that indicates to me that gold is bearish versus silver. Silver is bullish versus gold. We are
Right.
likely to see a collapse in this ratio. Silver's going to outperform gold. So right now we got gold outperforming the Dow, and we got silver outperforming gold. Now oh, and this is other thing I want to bring up because this happened during the week, and it's really important to keep in mind. Um, there's a big elephant in the room, and it's the COMEX, and they I call them the Crimex because I think that they manipulate the market to their advantage. And this past Wednesday, we saw a technical failure on the COMEX during a massive silver and natural gas run. They froze the pricing exactly where silver was testing, I believe, $92, which is a really, really important support resistance.
Mm-hmm.
And when the exchange glitches, right as the metals are about to break out, for me, it's a sign of exhaustion, meaning that they can't hold the price down any longer and they're trying to manage price through paper dumps. But with geopolitical events, especially this weekend, that cold spring that they're holding down, it's going to blast off. So don't be fooled by technical issues. The demand is real and the supply is gone. And guess what? There was a tech in the last 5 years, there have been three technical issues. In the last 3 months, there have been two. So the last
Wow.
Yeah. So in the last time there was a technical issue, there was a cooling issue. I remember this because it was on what day was it? It was in November. It was Black Friday. It was the day before Black Friday, if I
Mm-hmm.
remember correctly. And after that cooling issue, silver ran up from there 120% from that cooling
Oh,
issue. And we just
wow.
got another technical issue. So if that plays out the way I think it's going to play out, that means $200 silver in the next 1 to 2 months. In the next 60 days, we should see $200
Interesting.
silver. So I want to bring up this chart because I found this really interesting. It is silver performance over history. If you go back all the way to 1800, how has silver performed relative to each year? Because now I'm not only comparing silver's performance this year. I want to compare it to every single other year of silver's performance. And you could see silver only had the two best years for silver was 1979, where we saw a 370% rise in the price.
So silver is the what's that? The golden line or something?
That's
Or
that's 1979. This is all silver. But each one of these is a different year.
oh, I see. Okay,
You
got
see what
it.
I'm saying? So last year was the second best year of silver's performance, 2025, where we saw 142% increase in price. If you look
Yeah.
over here, look at the blue line over here. This is where we at right here. This is where we're at. So I mean, so far we've had the hottest start. Look, with that 120 peak, we've had the hottest start than we ever have had in silver. The next best was it's really hard to see, but it's the red one. I think it's like 18. I don't even know. I want to guess there. But either way, silver has had better years, and specifically it was in 1979. And guess what was happening there? Similar geopolitical events as what's going on now, kind of the dollar decoupling from gold. And I think we're going to see a move back to it, actually. So let's move to the silver and silver miner ratio here because we want to see if it's better to hold silver or if it's better to hold silver miners here. And let's start with the monthly chart, as we usually do. Silver, silver miners. Come on. Come on. Work with me here. Work with me here. All right. So I'm going to go to the monthly chart and
Okay.
start with the zoomed out view. So overall, silver versus silver miners. If this is an uptrend, that means silver is outperforming silver miners. So this is a silver miner junior ETF actually. So we got that bearish divergence that I mentioned in the last video. Basically, price making higher highs, but the strength making lower highs, meaning that it's getting exhausted, meaning that silver junior miners are soon to outperform silver and break this uptrend line. Let's move in to the weekly chart. Um, we are now below 50 on the RSI on the weekly chart. So monthly chart, we are at 48, which means we're below 50, so we're mostly bearish. Bearish meaning going down. Weekly chart, we're also below 50 at 48.99, so call it 49. Check the daily chart. Daily chart, we're at 47. So each one of these charts, like I said, when RSI is below 50, especially when we cross below it, it indicates that we're changing trend. So above 50 on the RSI is bullish, below is bearish. So um, let's zoom in a little bit here, get a better idea what's going on. So we were getting rejected. Silver miners are outperforming silver. Then we broke from this downward resistance. Now we broke through that, and now we're forming an up. We were forming an upward channel. Bouncing. We broke out of it. We had a flag pattern here, meaning we're higher lows and lower highs. Then we broke out of that. That converged. We broke out and made a higher high. But is this higher high a real higher high? Let's check the RSI. Oh wow, we made a higher high, but a lower high on the RSI. So that means this chart's getting exhausted. Silver's getting exhausted versus silver miners. And guess what happened after that? Massive dump. Silver miners are the better hold. And now we are consolidating right where we saw some serious moves. So now what was originally support, meaning we bounced here, now we cannot for some reason get above 2.3. So let's see what happens Monday if this holds. But if this drops, I mean, silver miners are a really good bet. I mean, if gold is outperforming the Dow, silver is outperforming gold, and silver miners are outperforming silver, you're getting stronger and stronger here. And this is when I really want to get into something interesting now because I spent all of my weekend studying to find which was the best silver miner.
Okay.
And
All
yeah,
right.
I dove a little deep. Like I stayed up a few
Deep dive,
hours.
huh?
Yeah, I did some deep research. Like I literally spent 4 hours doing this last night. I swear I'm a nerd, but I'm gonna profit off of it. I don't care. Call me what you want, but you can't call me broke. Anyway. So silver. So the next chart to check is to see like, hey, what silver miners are the best out of all of silver miners? So you want to find silver miners that are beating the silver miner ETF. Um, and you can type this into Gemini or anywhere and check to see which silver miners are the best, and then run your own pair chart and see what you get. And I believe in my heart, and it's because not just because I'm praying to the stock gods, which don't exist, but I think that uh, AG, ticker AG, which is First Majestic Silver, it's a Mexican mining company,
Uh-huh.
and also keep in mind 25% of all the silver output comes from Mexico. Keep that in mind. Um,
Interesting.
Meanwhile, 70% of the refining comes from China. And the refining, China is restricting their exports. So there's a lot of supply constraints here. And then we see this stuff happening in Mexico this past weekend. That doesn't make this case any better, and it makes the squeeze a little stronger. So silver, SILJ, silver miners ETF juniors divided by AG. We lost Rich there. He might come back in a second. But while he's gone, here's a monthly chart. We were support here. We started at the bottom, support here. We bounced here again. Oh, did we bounce here? No, we didn't. And I wonder why. Why didn't we bounce here? Could we have seen maybe we wouldn't have bounced here in the past? Let's see. Let's see, right? So look, we're making some higher highs here. Look at that. Higher highs. But wait, there's more. Wait, there's more. And this is a higher high close. So we actually didn't really get. All right, I digress. I guess that's not really a bearish divergence, but you are seeing. I seem kind of funny, but anyway, you are seeing a downtrend here, and the RSI is now. It was making higher highs and higher lows, and now it's making lower highs and lower lows. So now it's in a downtrend, um, and we broke out. This is what I think is going to happen. This chart right here, I think that's what the Dow gold ratio is going to look like, what the gold silver ratio is going to look like, what the silver versus silver miner ratio is going to look like. And I think AG is going to be the best silver miner. That's my guess. Well, educated guess. And all the data is supporting this. And I'm definitely going off script here, but it's all good. And so the last thing I want to go over, so um sorry, let me send Rich another invite really quickly so that he can get in this meeting. Give me 1 second to create a calendar event. Um, Sorry about that, guys. Rich got disconnected, and I want him to hear what I'm saying, and I also want his insight. So it's better that you guys take a second. Rich, sorry about that, guys. Rich should be joining in a second. Hopefully, Hopefully that works pretty soon. Okay. All right, back to my analysis. The weekly chart now. Let's look at this weekly chart on silver divided by AG. And my apologies, guys. In the future, I'm going to try to make these videos a little shorter.
Correct.
Rich, are you back?
As we continue.
We're always improving here. We're always improving.
Yep.
It's okay.
Yep.
When we're like big and famous and everything, everyone's gonna look back at these first videos and be like, "Oh, you guys are amateurs."
I know, right? But
But
I
we
saw the 50-minute call, but I forgot about it.
yeah,
So I had to remind you about that.
that's my bad. I mean, we learn every day.
That's all right.
But I
We look
mean,
forward to our own studio one day.
yeah, yeah. Like I said, like I mean, the production could be better, but the information we're putting out is still high
Yep.
level information.
High level.
So keep that in mind. Okay, so I was just going over um, silver versus silver miners, and now I'm getting into silver miners versus ticker AG First Majestic, which
Yeah,
I believe
AG
is
is looking really good, man.
yeah. I think
That's that's my
AG
winner.
yeah. I think AG is going to do very well this week and this next month. Like I mean, just oh, let me share my screen so you can see
I
what
need
I'm
to get
saying.
my thinkorswim up.
Yeah.
From that, I'm just playing the crypto side of everything.
So check, and
Commodities.
you're gonna love my analysis
Okay.
here. Um, because check this out. I mean, AG doesn't break out versus silver miners very often, and when it does, it is rapid and aggressive. Like, and even if you wanna pull this to the 3 month chart, when we get a break of support, I mean, look at these candles, 18%, meaning AG is performing 18% better than silver miners. Look at this. We already got a 24% drop here. Um, so we can drop pretty low. Let's move to the daily chart and get this moving a little bit more. But yeah, we're not seeing any bullish divergences, meaning that silver miners are going to start outperforming silver. We're seeing, look, we got a lower low here, and we also got a lower lower in price. So this day didn't close yet, so we'll see what happens here. But what I was this is what made me, and I want to go into this chart now because I think there's actually something that, although AG is outperforming, I think um, there's something that might outperform AG, and I'll show you why. And that is
Really?
US oil, US oil.
Okay.
And the reason why is because of this pair chart between AG and US oil. And if you look out, we have, hold up, AG. AG divided by USO, right? Okay. Oh, yep, that's it.
So AG is outperforming right now.
AG is outperforming US oil. In the past, since 2008, um, this has been the range between AG and USO. This is kind of
Hmm.
like getting towards the high. But look, on the RSI, we have only gotten this high 4 times.
And
So,
and it's trending down too.
yeah. And it's trending down. So we got a high here, high here, high here, high here. But this high was an 89.5 RSI, followed by a 89.05 RSI, so it's declining, followed by another peak here, 87.31. And where are we at now? 85.38. So we're seeing a bearish divergence here. I don't know how this is going to play out. Although it looks like right now that AG is outperforming drastically oil. We are getting a bearish divergence. And what happened last time when this happened? We had a massive red candle and this reversed.
Yep.
Last time we hit this resistance, we went sideways, meaning that AG and US oil performed equally as well. So I think US oil is going to start performing. It's going to either do something where it trades sideways right here
Yep.
or gets rejected. And given that we had a bearish divergence here, we got a higher high. I think we're actually going to get a lower high here. I think that we won't go all the way up here. I could be wrong. I could be wrong, considering that this chart only really goes back to
Yeah. And
2008.
you're basically looking at this as like, okay, what do I what is my best case scenario of should I get into AG or USO? Basically
Exactly.
what you're doing. Yeah.
Exactly. Because AG is my one of my best plays right now. I think it's the best thing, one of the best things to be in. But I'm seeing an asset that is so undervalued versus it. And let's zoom in a little bit. Let's see if we're seeing same thing, something similar on the lower time frames. And look at that. I mean, we got a higher high last week, right? AG outperforming USO, but another bearish divergence here, right? On the weekly chart. So we got one on the weekly, the monthly, and now the weekly.
Hmm.
Let's see if we see it on the daily too. And look at that. We got a higher high here,
Hey.
higher high, and we got another higher high here. We got a lower high, which is a bearish divergence, meaning that the trend is likely to fail. And now we are trying to test that one more time. So, and we made a higher high. So this is the second bearish divergence on this chart. On the
Yep.
monthly, the weekly, and the daily. So I'm very curious to see what happens here. And that's kind of why because I went long on oil on Friday. Um, and this was one of the reasons why, because I saw the bearish divergence on each chart. I know AG is going to be the top performer, but there's something where it looks like oil might crack. I mean, it might crack versus oil. So just something to keep in mind. And I kind of sniffed out that the oil boost, but I mean, at the end of the day, you got to ask yourself why this stuff is happening, and it's not a good reason. Like when this stuff happens, it's because people are dying and there's war. So keep that in mind. Like, although we're looking at charts here, like people's lives are affected
Yep.
by this stuff. So,
Yeah.
but I mean, the question is, are you going to be affected by it? How are you going to defend yourself? How are you going to defend your family? How are you going to defend the people you love, you know? So
Yeah.
I'm not going to sit on the sidelines while the rich bankers are making all this money off
Hmm.
manipulating people and killing people. Or the government, and I mean, war is not good. I can, like, it happens, but it doesn't mean I have to be a victim to it.
Yeah, it's out
I
of your
can come out.
hands, but your finances, you can take control over that. To also, it's not financial advice. This is how we operate, and this is what we look at. This is what we decide to do. But you have to decide what steps you want to take with regards to your finances.
Yeah, exactly. So personally, right now, my portfolio, I mean, I'm very heavy in gold and silver, but right now, in terms of my like weekly plays and my option strategies, I'm around like 70-30 split between oil and AG, ticker for AG, First Majestic. Like I said, I love First Majestic, but the math and from the pair charts is telling me that USO is the better performer for the week. So I'm gonna stick with my guns. I mean, last week I performed exceptionally. Um, and I'm proud of myself, but that's how that was last week. So it's a new week.
Hmm.
Um, I'm not gonna keep celebrating because I still got people's mouths to feed. So and there's a lot of people that need help. So
Right.
you know, we just got to keep improving. We never get satisfied. We can celebrate a little bit, but I mean, you got to stay humble and know that you have to manage your risk. So
That's right.
just because we're doing this analysis doesn't mean that it's going to happen, but we're just trying to improve the probability of it happening in our favor. So um, yeah, history shows that one thing I want to talk about. is that history shows that when the Dow sells off, gold, silver, and oil, when they all three of them rally together, typically the upside is parabolic. And I challenge you to look that up and fact check me because it's scary what happens when gold, silver, and oil rally together, all three of them. Just look up in history what
Hmm.
happens when that happens, and you might get scared because I mean usually people die. So um,
Yeah.
and the price of these assets go up parabolic. So
Yeah. It's something I learned about oil too. Also, if what's happened, the geopolitical thing that is going on in Iran, um, s- this is purely speculative. Part of what I'm about to say is they're looking to control oil.
mm,
Now, oil is traded in one currency, and that's the US dollar.
yes, yes, yes.
So if you look at what's happening in US dollar now, it's approaching to break out of resistance to also. So it's going to be more expensive to buy oil
Yep,
in US dollars.
exactly.
Yeah.
And I'm actually curious to see what oil is doing right now. Wow, look at that gap up on oil. Look at that. Are you looking at my chart here?
Let's
Look at
see
that.
here.
Yeah, so I mean, oil has been trading in this downward trend line, right? This downward channel. You
Oh,
see
I see
this?
it.
And
Yeah.
and now we just gapped up. So
Yeah.
my guess is that we sell off at open and maybe test this trend line because this trend line has been in effect since 2023. So we had a strong move up. Typically, strong moves up have been preceded by a strong move down. It
Right.
depends on if things escalate in Iran, but that's something to keep in mind. We could easily see what I'm expecting is I'm going to take some profits on my options, and I'm going to wait for a pullback to test this range. So I open, I'm pulling my gains, um, and just watching and seeing, especially what I'm seeing right here, the dollar breaking out to the upside. I want to see where this opens, you know.
I think that's a great idea. Taking off profits. Plus you got that up move, especially if you go in the morning and you got options. The options are more expensive, which is good for you. You're in it. So if you're selling it, you're gaining on that. And with the exaggerated move and the up move and the move to prior to that, because nothing goes straight up or straight down. They're gonna be pullbacks. So looking for a pullback. Even right now, unless some money comes in, silver is pulling back and consolidating. So we'll and there's some leveraging, and moving averages needs to catch up to also. Just something to
Yeah,
keep in mind. Yeah,
yeah.
that's what I get. That's what I got, man.
Yeah, so you guys got some good information. And I know Rich has done this too. We spend all week looking at these charts. So, all of my thoughts and my ideas, I am trying to share that knowledge with you guys because it took me a while to feel even confident to do these videos because I didn't feel like I had something valuable to offer, but now I feel much more confident in myself after lots of studying and research, daily studying, and daily Kaizen, and I want to offer that to you guys. So,
now, now, based on that first meeting, because I know you, because I know you're humble, you probably wouldn't say, but how many trades did you make last week, and how many were profitable?
so last week, I made a total of 5 trades throughout the week. Wednesday was the only day I didn't trade. I actually sold. I guess that technically is a trade,
Yeah.
but
Every
I
time you
was
close, yeah.
yes,
Well,
yes.
let me rephrase. How many trades did you close, and how many trades were profitable?
So last week. I opened 5 trades and I closed 5 trades, and I was profitable on all 5 of them. So,
Damn.
guys, yes, I'm not gonna lie, that was by far my most successful week trading. And of course, it's right after we do these videos. But I mean, like I said, I'm gonna stay humble. I took my profits. One of the biggest things I did last week was take profits, because we saw some quick moves down, and I was able to get back in. And my percentage gain was phenomenal. So I'm very happy about my progress. I want to build on that this week coming in. Um, I'm gonna pull a little bit of money out of my account, just like mentally. I like to see a certain dollar level, just
Hmm.
until I get comfortable trading with that much money. Because I mean, when you start trading with a lot of money, then your emotions start getting into it. So you got to manage your emotions.
Yep. Exactly.
So, so it's
Yeah.
be I noticed I trade better with $500 or $1,000 on my account than I do with 15 or 20, you know. So my trades are better when I have less money in there. So because I have less emotion, I have less attachment.
Yeah. Matter of
So
fact, next week, I'll not so much charge. I'll come an approach of managing your portfolio risk management. I'll focus on risk management um, our next session.
yeah, yeah,
Yeah.
that'd be good.
Uh,
But I hope everyone has a blessed weekend. And I guess outside of trading, remember that, hey, you woke up today, and that's one thing to be happy for.
Yep.
And there's more outside of life than these charts. There's
Absolutely.
family, there's friends, there's so much to be grateful for. Think of some things that you're grateful for, and appreciate them. Don't take it for granted. Try to give someone a call that you haven't talked to in a while, and show love, give back, if you're religious, pray, but try to be a good person. So,
Yes. Awesome.
all right, you got,
Couldn't have said it better.
yep, yep. You got any closing words, or you get to go?
Yeah, I'm good to go. I couldn't say anything better. That's those are the great final words.
All right, I appreciate it. Enjoy the rest of your weekend, and we'll catch you next
Good
week. All right.
morning, good evening, and good night.
All right.